Welcome to the deep dive. It's April 22nd, 2025.
Already buzzing this morning.
Absolutely. Seeing three big stories trending on X. Trump apparently keeping Powell at the Fed.
Interesting.
Then a huge rollback on China tariffs, like from 145% down.
Oh, okay. That's significant.
And Elon Musk maybe signaling an exit from DOGE.
Always something with Musk, so quite a mix.
Definitely a swirl. So our mission today is to, well, try and make sense of it. We're going to look at this through the lens of Benjamin Graham's The Intelligent Investor.
Right, the classic, the one Buffett always recommends.
Exactly. So how would Graham, advise navigating this kind of news day?
That's the key, isn't it? Graham's whole philosophy, it sort of boils down to two things. Value investing, really understanding a business's worth, and crucially, emotional discipline.
Don't let the noise get to you.
Precisely. Don't let the market's mood swings dictate your actions. That's where his famous Mr. Market idea comes in.
Oh, Mr. Market, the moody business partner allegory.
Yeah, exactly. He imagines the market as this partner who shows up every day, offers to buy your share or sell you his, but his prices are driven by, well, sometimes optimism, sometimes panic, often irrational.
Okay. So applying that, Powell staying put, maybe Mr. Market sees that as less uncertainty, a calmer mood.
Could be a potential stabilizing force for monetary policy, perhaps.
And the tariffs rolling back. That sounds like easing tensions, maybe good news for supply chains?
Again, potentially. Mr. Market might react positively to that, seeing lower costs ahead.
But then Musk and DOGE, that feels like pure sentiment fuel, right? Something that could definitely trigger emotional reactions, especially in the crypto world. People on X seem to think this all points towards calmer markets overall.
And that's where Graham would step in and say, hold on. Yes, observe Mr. Market's reaction, understand the sentiment.
But don't necessarily act on it immediately.
Exactly. He'd urge you to look beyond that initial reaction, beyond the headlines. What are the fundamentals?
Okay, so let's dig into those fundamentals. What might Graham actually focus on here? We're seeing some talk, sources suggesting Powell staying could maybe give the S&P 500 a, hypothetical 5% boost?
Right, that's a potential market reaction linked to policy stability. Graham would acknowledge that, but focus more on what it means for underlying business profitability and interest rate environments long term.
And the tariff cuts. There are figures floating around, maybe $10 billion in annual savings for retailers. That feels more tangible.
Yes, that's getting closer to fundamentals. Graham would analyze how that potential saving impacts specific companies' margins, their competitive positions, their intrinsic value. Is it a sustainable advantage?
Gotcha. So how does the Musk-DOGE situation fit in? It seems more speculative. Claims about past savings, policy noise, Trump's spending versus Biden's. It's a lot.
And Graham would likely treat it with, well, considerable caution, he'd ask. What's the real underlying value here? Policy shifts matter, yes, but for a value investor, it comes back to sustainable earnings, assets, future prospects, not just pronouncements or, short-term hype. It's about finding long-term value, especially navigating the kind of uncertainty we're seeing in 2025.
It really is striking how relevant Graham's advice feels today, decades later. And it makes perfect sense why Buffett credits the intelligent investor so heavily.
Absolutely. Buffett's entire career at Berkshire Hathaway is practically a case study in applying Graham's principles, focusing on that intrinsic value, ignoring the fads, buying good businesses at fair prices.
His 2014 letter comes to mind where he really emphasized that timeless wisdom.
Right. And that perspective offers a great way to filter all this news we're seeing on X about tariffs, Powell, Musk. Focus on the business, not just the noise surrounding it.
These trends, economic policy shifts, tech leadership influence, they're exactly what our listeners follow. We touched on related things in EP57 on economic trends and EP56 with tech leaders, didn't we?
Yeah, it all connects. And the intelligent investor really gives you the mental toolkit to deal with it.
So what's the core tool from Graham for today's investor facing, say, 2025's volatility?
It's discipline analysis. It's having a framework to say, okay, what is this asset really worth? And cultivating that emotional detachment. Don't get swept up in the euphoria or the panic.
So imagine an investor today, market dips because of, tariff jitters. Instead of panicking and selling, the Graham approach is what? Step back, analyze.
Exactly. Ask. Has the fundamental long-term earning power of the companies I hold actually changed because of this news? Or is this just Mr. Market having a bad day? Often dips driven by fear can actually present opportunities if the underlying value is still intact.
That long-term view seems critical, especially now. Focusing on value over knee-jerk reactions to policy headlines.
It really is. It forces you to think like a business owner,
Yeah.
not just a trader reacting to blips on a screen.
So maybe the final thought for our listeners digesting today's news.
Yeah, perhaps it's this. Think about how consistently applying these core principles, focusing on value, maintaining emotional discipline, could be your anchor. How it could provide a framework for navigating not just today's headlines, but all the unexpected shifts that are, well, pretty much guaranteed in our world.
A way to find stability amidst the constant change. Something definitely worth considering.